What if the Fed actually cuts interest rates this week? Would that be the spark that sends Bitcoin and XRP flying? Or are we about to see another sell the news event that wipes out the impatient before the next leg up? Today, we're breaking down exactly what's happening at the Federal Reserve, what the market's expecting, and most importantly, how it could impact crypto, especially Bitcoin that's currently 112,500 and XRP that's sitting at $2.62. We'll look at the data, the psychology, and I'll show you how I'm reading it through the Howl Line indicator so you can see what I'm seeing right now. Let's dive in.
I am not a financial advisor. This video is based solely on my opinion on what I'm personally doing in this market. I also want to let you know that some of the links below and in the descriptions are affiliate links, meaning I may get a commission, but it will be at no extra cost to you. Please remember that under no circumstances will I ever contact you and ask you for investments. You can confirm all of my real social media handles in the description and also at milkshakematty.com. This content is for educational and entertainment only, and I'm not a financial advisor.
The big question this week, will the Fed cut interest rates? Right now, the Fed fund rate sits around 4.25 to 4.5%. Markets are heavily pricing in a 25 basic point cut, and a few analysts are even whispering about a 50-point surprise. With the CME FedWatch tool showing traders are leaning almost entirely towards a cut, that means Wall Street is already positioning for cheaper money and easier liquidity. But not everybody at the Fed agrees. Some officials are still cautious, saying inflation hasn't fallen enough to unleash stimulus. So this meeting isn't just about if they cut, it's about the tone of Powell's statement. If Powell sounds dovish, talking about supporting growth or normalizing conditions, that's bullish for risk assets. If he sounds hawkish, even with a cut, markets might dump first before they recover. The tone of Powell's speech is everything. When the Fed cuts rates, borrowing becomes cheaper. The US dollar weakens, liquidity rises, and investors start hunting for yield. That flow usually hits risk assets, stocks, tech, and crypto. Historically, Bitcoin thrives in these environments. Cheaper money and weaker USD fuel the digital gold narrative and invite speculation. For XRP, the effect is indirect but still powerful. A looser monetary policy lifts global liquidity. Perfect for cross-border settlement asset built for efficiency. And now, with Ripple's growing institutional footprint, that macro tailwind could finally align with the fundamentals. But here's something to keep an eye on. If the Fed cuts because the economy is in trouble, risk assets can still fall. A rate cut alone isn't magic. Context matters hugely. Right now, inflation's cooling, jobs are stable, and sentiment is improving. That's the sweet spot. If the Fed plays it right, this could ignite a fresh bullish cycle. Let's zoom in on Bitcoin, currently sitting at 112,500 US dollars. Every major Bitcoin rally has started with a liquidity shift. When the Fed prints or cuts, Bitcoin reacts. We saw it in 2020, 2021, and again during the late 2023 when traders sniffed out the pivot early. On the chart, the Howl Line is showing rising momentum. Price is riding above the mid-trend band. Volatility is compressing and strength is building. If we get that dovish pivot confirmed, it could fuel a push towards the next macro resistance, possibly around 118,000 to 120,000 US dollars. But traders love to front run the Fed. If the cut's already priced in, we could see a quick sell the news wick before continuation. Watch the Howl Line. If the trend band widens while RSI compresses, that's often the tell that a fake out is ending. If Bitcoin holds above the Howl Line through Powell's press conference, momentum likely continues. If it breaks below, expect a fast liquidity grab before the reclaim. Now let's talk XRP, currently sat at $2.62. When interest rates are high, capital hides in bonds. When rates drop, that safe yield disappears and capital goes searching. That's where XRP can shine. Ripple's acquisition of Hidden Road and the launch of Ripple Prime have positioned them squarely in the fintech lane. From a chart perspective, XRP's been consolidating beautifully between $2.40 and $2.60. The Howl Line shows a solid base forming. Momentum's neutral but compressing, and historically that precedes an expansion. If the Fed confirms a rate cut, liquidity inflows could send XRP testing that $2.80 or even the $3 short term. But don't forget, volatility cuts both ways. Let the Howl Line confirm the move. Patience always beats prediction. Every Bitcoin bull market aligns with liquidity turning points. 2013, 2017, 2020, each followed easing cycles with stimulus waves. Crypto might live outside traditional finance, but it still dances to the rhythm of global liquidity. Historically, the second rate cut in a cycle delivers the biggest impulse. The first restores confidence, the second confirms the trend. So if this week marks the first step, that's the spark, not yet the explosion. That's why I'm laser focused on the Howl Line's behavior on both Bitcoin and XRP. It doesn't just mirror price, it tracks the health of momentum. When macro policy pivots, the Howl Line slope is often the first to shift. That's the Wolfpack's early warning system. FOMC weeks are trap weeks for over-leveraged traders. Volatility spikes, stops getting hunted, emotions take over. Here's my personal playbook. No blind entries before the announcement. Wait for Powell's tone. The first 5 minutes are just noise. Use the Howl Line as confirmation. 2 consecutive green candles above it, momentum is probably validated. 2 closes below it, trend is falling. And lower that leverage. Volatility will be wild. It's better to be in the move than out of the market entirely. Respect the Howl Line's dynamic stop zone. If price slices through and closes under it, cut, re-enter later. Discipline keeps you in the game. Don't chase the first candle. Let the dust settle, then trade that reaction, not the headline. News fades, but trends, they endure. This week could mark the beginning of the next global liquidity cycle. If the Fed cuts, the European Central Bank and the Bank of England may follow. That could be a domino that reinflates risk appetite worldwide. Crypto is still tiny relative to traditional markets, but that reacts fastest when money starts flowing again. Pair that with ETF flows, institutional onboarding, and the Bitcoin halving halo still shining bright, and we have a setup that feels eerily familiar to that 2020. For XRP, macro tailwinds could finally complement Ripple's structural growth. Trade finance, tokenized assets, and now institutional custody all benefit from cheaper capital. That's why many analysts are calling 2025 the repricing year. Not about speculation, but about reevaluation. While the crowd will watch the headlines, the Wolfpack are watching the data calmly, clinically, and ready. Scenario 1 is a cut with a dovish tone. Powell talks about sustaining growth and confidence returning. That is good for risk on assets. Bitcoin should test that 118,000 to 120,000 US dollars. With XRP, I think it should break the $2.80 and the altcoins should rally. That is the most bullish situation. Scenario 2 is there is a cut, but there's cautious language. Powell says data dependent or one and done. No more cuts after this one. In that situation, I think the Bitcoin could even dip down to about 108,000 and then it recovers. And XRP may well retest that 130 zone all over again. It will feel volatile, but it's okay. Don't worry, if that's a situation that pans out, do not panic. Then we got scenario 3, no cut. That would be a hugely hawkish surprise. And that would be risk off. Bitcoin could pull back to 102,000 US dollars. XRP back down to the 220 area. Likely short-term pain, but long-term opportunity. Because if these assets drop down there, it's a time to load up again. Either way, volatility equals opportunity if you trade it with structure. Let's look at current setups. First of all, Bitcoin. Howl Line is still bullish on the daily. Higher lows, tightening volatility bands, RSI curling upwards. That's a classic pre-expansion behavior. And then XRP, the Howl Line is compressing on the 4-hour. Volume is ticking up and structure is holding above that $2.55. When momentum call meets liquidity catalyst, the move can be explosive. The charts are whispering before the news shouts. Listen to them. So here's the bottom line. All eyes on the Fed this week. A rate cut this week could ignite the next phase for Bitcoin and XRP. But remember, it's not the cut itself. It's the signal behind it. The Howl Line showing strength. Liquidity is improving and sentiment is shifting. We're entering that rare period where macro and crypto sync together. Whether you're trading or holding, stay calm, stay disciplined. Let the data, not the drama, drive your decisions. If you found this breakdown useful, hit that subscribe button. Also, drop me a comment down below. Let me know how you're feeling about this week. Are you positive or are you a little bit nervous right now? Let me know in the comments how you're feeling. And if you want to learn more about how the Howl Line helps spot entries and avoid traps, check the link in the description. I'm Milkshake Matty. Trade safe, stay sharp, and remember, the strength of the wolf is in the pack.